JJ, first, what do you make of this volatility, the violent market reaction, especially given we've been through months and months of trade concerns that didn't lead to this type of reaction? Sounds like we don't have JJ's sound. We will try to get that. Jeff Richards, you can answer that market question if you like, but I'm also wondering what you see from the corporate perspective. Your own meetings, your own communication, you're dealing with startups and companies globally that are trying to continue to do business in this environment. How are they adapting as the headlines change day to day?
Yeah, I mean, as you can imagine, John, it's a little bit of a real-time question. We're getting questions daily from portfolio companies and then also monitoring what the larger companies like Apple and Salesforce are doing. The one thing I would say that's interesting and perhaps a silver lining here is that a lot of private companies over the last 5 to 6 years have really built virtual teams around the world. So this idea of working remote or working from home is sort of built into the DNA of these companies, and you can see that reflected in the stocks of companies like Zoom and Slack and others that benefit from that trend. But that's been happening for a while, and so I don't know that there's as great a shock to the system for private companies in saying, hey, gosh, we need folks to work remotely or perhaps do a conference remotely. But it's definitely causing a lot of fear, uncertainty, and doubt in Silicon Valley.
Yeah. JJ, I believe we've got better sound for you now, so we can actually hear you, not just see your lips moving. Question was about the continued volatile market reaction to certainly coronavirus, perhaps some political headlines as well, given the fact that we went through such a long period of some market reaction to trade concerns, but nothing like this.
Yeah, well, I just got done saying all this brilliant stuff, John. No, honestly, it's, you can draw so many parallels between this and what we went through in tariffs, in that we have something that is going to last an unknown period of time, and people aren't sure how it will affect them. I think the bigger difference here is, though, that, tariffs for many people were a little bit of an esoteric concept. In terms of the coronavirus, everybody can personalize what could happen to them or to their families if it continues to grow bigger. And so I think that's why you're seeing the extra level of volatility. And one thing about that, for so many of your retail traders who are watching right now, people are like, well, what should I do? Things are moving so quickly. I think the first thing you have to do is kind of cut down on your size a little bit. If you were normally trading 400 shares, maybe you make that 200 now, because we're going to have bigger ranges. That's really what volatility means. You're going to have bigger ranges, and that particularly goes for anybody who's going to use stop orders or things like that, because if you keep your ranges where you were before, you're probably mathematically setting yourself up to not do as well. And I think it's really important to sort of take a breath and cut down on the size that you were trading so that you can withstand a little bit more of these moves without, freaking out, so to speak.